Genting Malaysia says that dividends will remain its main way of rewarding shareholders despite losing at least 160 million during the movement control order. Genting CFO Koh Po Yong says the group will continue to balance the need to conserve funds with its desire to reward shareholders with dividends. As such, the company will still proceed with the payment of the 2019 dividend of 5 cents per share if approved. Shareholders later approved the final dividend during Genting Malaysia's virtually conducted AGM. Also at the AGM, the company announced that it is targeting to open its outdoor theme park in the second quarter of 2021. Named Genting Skyway, the new park will still feature movies from 20th Century Fox as well as other unnamed international class movie-themed attractions. To recap, in July 2019, Genting Malaysia announced that it had resolved its dispute with the members of the Fox Group and new parent Walt Disney Co. The settlement grants Genting Malaysia the license to use certain intellectual properties of Fox. Cinema and theatre operations as well as indoor live events will be allowed from July 1st, according to Senior Minister Datuk Sri Ismail Sabri Yaakob. He says that these activities have to be carried out in halls according to the strict SOP set by authorities, Bernama reports. Attendance will be limited to 250 people per show, subject to hall capacity. In addition, all organisations, including political parties, sports bodies and corporations, will be allowed to hold their AGMs, again with the new SOPs firmly in place. The government has also decided to allow recreational swimming in public swimming pools, hotel pools, condominiums and gated communities, as well as private swimming pools. MQ Technology was the most actively traded stock on Bursa Malaysia today, closing 30% up at 6.5 cents on heavy trading volume. In total, more than 506 million shares changed hands, with the counter trading as high as 7 cents at one point during the course of the day. Interest in the stock came on the heels of its announcement last Friday to the bourse concerning its intention to acquire glove manufacturer Latex Partners. MQ Tech said that it will be in negotiation with Semperit Group for the proposed acquisition. The company, whose core business specializes in high-precision molds and magnetic coils for hard disk drives, has been loss-making for the past 5 years. Moo Heba Engineering saw its first quarter net profit plunge 84.6% to 5.1 million from 33 million ringgit previously, as its airport concession business was hit hard by COVID-19. This was despite revenue improving 22.4% to 333.5 million from 272.4 million last year. Its infrastructure and cranes divisions also saw some impact when works were suspended during the country's movement control order period. Currently, Moo Heba's total outstanding secured order book for construction and cranes stands at 1.3 billion ringgit. Going forward, the group is expecting a challenging business environment as the global economy remains on shaky legs as governments around the world attempt to shore up their economies with stimulus packages. In its notes to the bourse, Moo Heba says it will be taking appropriate measures and actions to cater for its business undertaking moving forward. Monthly vehicle sales volume in May bounced back to 22,960 from a mere 141 in April, according to the Malaysian Automotive Association. However, on a year-on-year comparison, May sales volume was down by 62.2% as people were still wary of venturing out even after the government implemented the more relaxed conditional movement control order. This was compounded by cautious consumer sentiment. Year-to-date, cumulative sales between Jan and May 2020 was almost half to 129,561 units from 253,731 units a year earlier. On a more positive note, MAA says June sales volume would be higher as businesses resumed after the lifting of restrictions for most economic activities. Notably, traffic to car showrooms improved after the announcement on the sales tax exemption by the government.